You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 20th of March, 2017. As we ended the week on Friday, we saw stocks down, that is the S&P 500 and the NASDAQ 100. We also see that gold and bonds are up for the day. Now let's explore our charts and take a real deep dive into what's going on the weekly. If you recall, on the S&P 500, our weekly vertical crossover occurred all the way back on the week ending the 25th of November. Remember Thanksgiving last year? That's where the market really started moving up. It moved up until right around Christmas time, where it slid sideways and then started shooting up again in late January and then started petering out at the beginning of March. We saw a down week on the week ending the 10th of March. We see a bit of an up week, but we can tell by our indicators the market is long in the tooth. Our PPO is sliding sideways with the red signal line approaching it, and our derivative oscillator is showing it's pretty much, I'd say, the first week of down moves. The market looks like it probably topped on the derivative oscillator on the week ending the 10th of March and then started moving down over the course of this past week. So the market is still in a confirmed up move on the weekly chart, but it isn't a confirmed down move on the 2-day chart. Now remember, the 2-day chart's got to move going down first before it can drag the weekly chart. It crossed over going down on the 14th, Tuesday the 14th, over the past week, and it has continued to move down as far as the indicators go. Derivative oscillators heating up with a lot of down energy, as is the PPO. Derivative oscillator heading down, and the PPO, the price percent oscillator, similar to the MACD. For those of you who are familiar with the moving average convergence divergence indicator, the PPO is just a better indicator to use, since it gives you an absolute, it gives you a number based upon a percentage rather than an absolute. So it allows you to compare across time frames and doesn't give you false readings like you can get sometimes with the MACD. So what do we see going on over the course of this next week with the S&P 500? Be careful of continued down moves. It did lose ground on Friday, had more of an up day prior on the 2-day candle ending on the 16th, but what really tells us the picture is what we see happening on the PPO and the derivative oscillator. That's the reason we use indicators and not simply price movement. So be aware of what's been happening as this move up has, at least for the last 2 weeks, been sliding sideways. Keep a close eye on what happens over the course of the next week with the weekly and the 2-day derivative oscillators, but particularly the price percent oscillator as it continues to slide sideways on the weekly, moving down on the 2-day. Now, if for some reason the market starts to boom and crosses back over on that 2-day chart going up, then of course you have the potential for continued up moves, since our weekly chart is still in a confirmed uptrend. So keep that in mind. It is long in the tooth, but again, if opportunities abound, take them. Remember, we are trend followers. We find trends and we find great entry points and we ride them like our weekly vertical crossovers. I mean, again, for just the months of January and February, just doing our trend following up 15.04% on the 3 different indexes that we jumped into. Those are great results of which we are very proud. Now let's go to QQQ. What do we see going on there? Well, as a reminder, the NASDAQ 100 QQQ crossed over going up on the 6th of January. We had a jumping in point that following Monday and rode that thing up to profitability. What do we see going on? Well, price movement has continued to move up. Again, it was a down day on Friday, but we have an open green box candle. We do see some petering off of the PPO, losing some of its upward steam, but it's still in an upward position. The derivative oscillator also lost a little bit of energy. We did see a crossover going down on our 2-day chart over the course of the last week. However, price movement has continued to move up. Part of the problem we have is when you have a sideways slide, our price percent oscillator has a hard time oscillating correctly if, of course, you've got a lot of sideways movement. Now, we do see it did cross over and is accelerating down, and we're losing energy on our derivative oscillator also. So keep a close watch, a close eye on the 2-day chart. If the down movement ends up being strong enough, it will eventually rotate over the weekly chart, but it hasn't done that yet. Still above the weekly trend line. That's important to note also on the Q. So if you see a rotation back over of the 2-day chart, you may have a good jumping in point to continue to ride the direction of the weekly chart. Remember, all things being equal, charts tend to move in the direction of the largest chart. The largest chart we use is our weekly chart. That is the master. Okay, let's keep looking at our indexes. We're going to next go to TLT. That's the 20-year Treasury Bond Fund. It is in a confirmed up move still. We had a crossover going down on the 2-day chart all the way back on the 8th of March, and we had lots of down movement over 3 2-day candles, 6 days. Now the last 2 2-day candles, in fact it's only the first day of this current one that ended on Friday. Now again, it will wrap up that candle on Monday. The way we have the candles set up right now, they're ending on even days. So we have 2 up candles. We are still in a confirmed down move on the 2-day chart. If it crosses over going up, might give you a jumping in point since, of course, bonds are in a confirmed up move on that weekly chart. So continue to watch as the week starts. Bonds may fall back off again. Derivative oscillator still in the negative, and the PPO, the price percent oscillator, is. But remember, that weekly chart still in a confirmed up move, and the weekly chart typically rules until when? It doesn't rule anymore. Has to be enough strong downward movement on the 2-day to pull that down. So keep watching on the bonds. Now, let's go back to our weekly chart, and we'll look at our last chart for the week. Oh, for the record, bonds were up on Friday, 0.63%. Gold up 0.22% on Friday. What do we see going on with gold? Well, gold crossed over going up on the week ending the 27th of January on a weekly vertical crossover, and of course shot up for quite a while. It stopped that. In fact, the prior week, the week ending the 10th of March, was a big down week for gold, about what, $2 or so. And we saw this past week, the week that ended, of course, on Friday the 17th, being a down week also. Gold penetrated its weekly trend line and crossed over on the 2-day chart, and we've drawn a new 2-day trend line. If we tune into that, what do you see? Well, those last 2 2-day candles have broken through that, trying to move up. If gold does cross over going up on that 2-day chart, remember, we're still in a confirmed up move on gold. So keep an eye on that also as we start to see how things shake out over the course of this next week after Friday's triple witching hour, or triple witching Friday that we had on St. Patrick's Day. So just keep an eye on things. Those of you who do have the Stock Traders Almanac for 2017, if you don't, I ask you, why don't you have it? I encourage you to please open up to the page for this coming week, and you will see, in fact, that's page 37, you will see some interesting remarks on Tuesday about how the Dow and other charts tend to perform after triple witching. So important to watch. And also some interesting notes on Thursday about how March is typically, historically, later in the month of March. So watch those things. Now let's talk a little bit about things that might affect the market over the course of this coming week. Not a Fed meeting. We've already had that. But we do see U.S. existing home sales is going to be released on Wednesday, along with the weekly petroleum status, and you're going to see on Thursday unemployment insurance weekly claims, along with U.S. new residential home sales, and then on Friday, U.S. advanced report on durable goods. Now, what should you take from those things? Well, If the housing reports are super, super good or super, super bad, they may very well have some impact on the market. The same with the unemployment insurance claims, but don't be holding your breath. Now, again, something's bad in the housing market, then of course existing home sales or new sales, that can tend to weigh on the market or exuberate the market. So that's happening on Wednesday and Thursday. So just be cognizant that it will be in the news and just sort of see how it plays out. Remember, we're practicing here. We're not a stock calling service. We are an education firm, and we want to educate you, get you involved in these markets, figuring out what's going on, studying this stuff, practicing with us on a daily basis. I hope that those of you listening, as you've been listening, have been filling out your weekly market worksheets. This is the one time you do that, once a week, for the comprehensive weekly review and forecast. The rest of the time, you fill out your daily market worksheets. You follow along with us and you fill that information out. Then you can go back using your freestockcharts.com layout and explore other aspects of investing, trading, figuring out charts, and plotting things on your own. Ask you to spend just 10 minutes a day with us. Those of you who are listening and who are new saying, where do I get all this stuff this guy's talking about? It's easy. I'm going to tell you. You go to chartingwealth.com, the website. Here's what you do. You put your first name in. You put your email address in, and for free, no salesman will call. We don't sell our mailing list. It's ours. To date, we've never bothered anybody except to send them the information they ask for. And what do we send you? We send you our How to Read a Stock Chart video, a link to that. 15 minutes of must-have information to understand our thought process and what we do to follow trends in the market on the four indexes we follow, the S&P 500, the NASDAQ 100, bonds, and gold, those other two being inversely correlated to the first two. And we'll also send you a link to, information and instructions on how to get the charts that we use at freestockcharts.com, how to go, sign up for a free account, and then use our layout so that you have exactly what it is we use. We give that to you for free. So do the good folks at the Warden Brothers at TC2000 and freestockcharts.com. Then we also send you PDF files that you can download and print out your own blank copies of the weekly review and forecast and the weekly market practice sheet and your daily market practice sheet. We send those to you also so you can print those off and practice them with us. Those daily market worksheets are just what you need to supercharge your training. One last thing, if you're not already, text to the number 33222 the words Charting Wealth, and I'll tell you again how to do that. If you text Charting Wealth to 33222, we will put you on the list, and the next time we have a weekly vertical crossover, that is the biggest trading opportunities there are. When those occur, we will text to all of our friends who've shared that number with us the fact that it has occurred, telling you what you need to do to practice a wonderful, profitable trade for your virtual trading account when that happens. Those who've been watching a long time and listening, you know exactly how profitable that can be. And all you have to do is text to the number 33222 on your cell phone. You text the words Charting Wealth. And again, if you get the newsletter, the instructions are there. If you're not getting the newsletter, I guess the question is, why aren't you? And why in the world would you share your text information if you're not every day practicing what we do? So it takes 10 minutes a day, folks. It's the best, most profitable 10 minutes you're going to spend for building your wealth in the future. Go read the reviews on what we do and how simple we keep it and how accurate and wonderful it is and how well it works. I get emails from you guys every day about how much you appreciate what we do for free and how much it helps you with your trading. Plenty of folks have written me saying, I'd tried trading, I'd continued to just get hammered, I could never get anything right, and now after listening, after participating, after doing my daily and my weekly market worksheets and practicing, I'm seeing successful trade after successful trade in my virtual trading account. And the reason I keep saying virtual trading account, we're not a stock calling service. We are not giving market advice on how you're to go out and make your fortune. You are to practice with us. You are to get good at this, learning what we teach you, all the other things you've learned, the books you've read, you roll it all together. I believe investing and trading is an individual art that you build based upon your time, your capacity, your risk profile, all the things that you want to do. Once you put it all together, you have your own unique way of trading. I don't ever try to train robots. I want to train people who are thinking, who are malleable, who go back in time and do back checks and figure out what works, what doesn't work, hold on to what works, discard what doesn't. That is what we're all about, is being realistic, because in the end, it's about keeping it simple and successful. Because if you're not being successful, then you're just wasting your time. We want to teach you to be successful, and it is perfect practice that makes perfect, not just practice. Thank you so much, folks, for being with us. Again, let us hear from you. You can write us anytime, cw@chartingwealth.com. The website is Charting Wealth. Go there, download the information, watch all the training, sign up for the newsletter, and again, let us hear from you from time to time. We particularly love to hear about what's not working and what is, and any special skills and things you can share with us, because we're all in this together, my friends. God bless. Take care from chartingwealth.com.